All right, let's now focus on the Nigerian naira. Of course, this year it's up about 3%. Today we did see some weakness coming through as we continue to see some interest in the Nigerian currency from foreign investors. Of course, we've seen that win a little bit recently. The naira today closing at 157.5 in the interbank market. Of course, we did also see the central bank come to the table today, as it usually does on Wednesdays. Today selling $150 million to intervene in that market. Let's now cross to UBA to get a perspective from Nwabueze Okonne. He's an FX trader at UBA. Nwabueze, it's great to have you on the show today. Like I mentioned earlier, some weakness in the naira today. The results we saw from the central bank auction today, what can we read into that? Like I mentioned, $150 million sold today. On Monday, we did see 162. So much less supply, if you like, from the central bank.
Yeah, I mean, from the central bank angle, you always remember that they actually come to show that they have the capacity to meet whatever demand that we come into their window. Not forgetting that on Monday they actually offered 180 million, and they saw a demand for just 162 million or thereabout. So today it's just for them. They are actually showing that they have capacity, and also not underlining that one of their major function is price stability. So they wouldn't want to be seen to be like giving the market so much liquidity when there is no more demand out there. I mean, overall, I think the aggregate demand at the CBN window has actually been on a slowdown. So on their side, it's more of, I'll read it as more of a response to supply and demand rather than any particular measures. But overall, we think that price stability is key for them, and they will obviously show willingness to meet whatever demand, either on the increase or on the decline at their side.
You know, recently we've seen much less supply to the market from the foreign investors looking for Nigeria's fixed income. It has waned a little bit over the last few weeks compared to what we saw several months ago when we did have that announcement about the inclusion into the JP Morgan index. But can you talk to me about the demand side? Because what we're also seeing is that it seems demand seems to have weakened a little bit. Of course, the central bank not selling as much as it used to, so clearly that reflects a decline in demand.
Well, like you said, I mean, central bank not selling so much, but not forgetting, like we also said about the fact that we've actually had a lot of flows from the offshore side coming into the market. I mean, looking at vis-a-vis the prices where you get from the offshore flow versus what the central bank is doing, you'd see that most demand will be filled in by those flows rather than coming to the central bank window. And the fact that currently now you have a bit of very good price convergence, so either the central bank or the interbank window, either way looks very good for the end users, and they'll feel either from either window, whichever one offered them the best prices. But overall, like I said, overall demand has really been waning a bit. Credit supply into the general economy hasn't been that on the rise. So it tends to translate in a subtle manner into the demand function. You know, you're not forgetting that CBN has actually been involved in a lot of monetary policy activities, using OMO, increasing CRR, which they've done over the period of time, all in the bid to mop out naira from the system. All these are the various factors that would actually slow down any speculative demand that you might have want to see on the currency. So really, those are the flows, those are the effects of the various policies and the various general economic sentiment and the general credit growth. Those are the factors that are currently feeding into the demand leg. But albeit you might just see some pickup onto the demand end into the coming weeks.
Well, given the place where oil prices are today, there's a good feeling about the naira. But what are your thoughts? Any risks for the rest of the quarter in your view? I mean, the naira has gained about 3% this year already. Some people think it could even strengthen further if we see oil prices remain where they are. If this demand scenario that you've just painted continues to be the case, then of course there's even potentially maybe some moderate upside for the naira.
Well, I mean, I don't think that naira would actually go out put any surprise for us in terms of movement. I think that the factors that you've actually did mention support the currency, and also on the fact that the yields look good right again. We did mention that some slowdown on the offshore side had happened for the past few weeks, but we're seeing some uptick again on that. So we see the flows coming in again, even if any demand that might come in between this period, it might just be a temporary blip. But overall, we think it's a stable currency into the quarter. We think that the range will be fairly maintained between 157 and 158, and we think that demand and supply would actually be at slight equilibrium, and you might not really see such shocks of distress. I mean, looking at the indices that we have currently on ground right now.
Let's move on to the fixed income market. Of course, the inflation number is key for bonds. Can you give us a sense of how the bond market reacted to those numbers today? 11.3% from 11.7% in August, year on year.
Interestingly, I think the inflation has been touring in line with analyst expectation from for the last two figures, if I'm correct. Analysts expected around 11%, came out at 11.3%. Obviously, the markets reacted on the shorter end, losing about 35 basis points on the yields. On the longer end, about 25 basis points also. These are, like I said, almost in line with market consensus. So in a way, these rates have already been priced into the what we see in the currency. So you actually did see a little slight decline in yields. I think people would want to watch to see how much the expectation in inflation will continue to pan out versus the estimate or the forecast that we already have on ground into the end of the year. And the more the estimate ties where with the actual figures, the more you begin to see more sharp decline or sharp movement in yields across board. I mean, market generally expected that inflation would have peaked at 12.9, which it did about 2-3 months back, and from there we expect to see a gradual steady decline. And those are the things that we want to watch out for. You might see a bit of position taking into those expectations, but overall I think 2-3 times of confirmation of actual versus forecast will give market more confidence into position taking on the back of inflation figures.
All right, Nwabueze, let's leave it there. Thank you so much for your thoughts and joining us on CNBC Africa today. Nwabueze Okonne, FX trader at UBA.